Morning. Been keeping an eye on the growing Z-score on short VIX futures positioning. Today it's at negative 2.5 times for 1 year, enough to earn a green arrow in your slides. Can you contextualize this against the Quad 2 backdrop?
Yeah, well, first what you'd do is you'd contextualize against everything else that's on that page, right? You wouldn't just isolate on VIX. So VIX, yeah, people have been shorting VIX because VIX just collapsed and crashed, and it likely will continue to. So consensus has become that. The other arrows you'll note are net short positions on both the Russell and the S&P 500, which he did not. Okay, so what matters more than the other? I don't know. I mean, what we do know is that consensus came into the year, particularly hedge funds, long the same book of ideas and short the index, right? Net short the index. There's still 61. There's actually one of the bigger short positions there's been on SPYs. Net short over 61,000 contracts. So that matters a lot more to me than the vol thing. The vol thing happens after volatility went down. What's more important to me is A, are we at the low end of the range on IWM this morning, and B, look at that big fat implied volatility premium. Pop that up. So again, now we got a short position in the Russell, which is relatively new, and we have a rising implied vol premium with the Russell being at the low end of the range. That matters a lot more than just an observation like, what did you say about Tesla? What do you think about that VIX thing? It's actually what I do with all the information that matters the most, right? So you don't want to ask Hans. I mean, Hans, like me, is kind of a short guy, but he can get up the mountain. You don't want to ask Hans, disturb him when he's trying to get up there. Like, just get up there, make the moves you're going to make, and ignore all the noise in between. You don't really have time. You're in 200 feet off a cliff. You don't really have time to pay attention to the things that aren't going to get you to where you need to go. So again, I'd focus a lot more on the doing, the summary of the doing. Yes, pay attention to all the observations, which you're also going to notice there in macro net positioning, whether it's cattle, hogs, or platinum and the British pound. British pounds, maybe those are all the net long positions. For a while, there really wasn't a net long consensus on anything because people aren't bullish enough. And there certainly weren't bullish enough on commodities going back to when we started buying them back in June. But the British pound, like, what money manager is long the British pound? I don't hear that very frequently. It doesn't matter what I hear. It's what you see. Now people are net long the pound at the top end of the range. So Today you got top end of the range. Pound is a big consensus over-owned position now. So if you're long some pounds, you sell some pounds. Maybe you sell more aggressively because you see that. That's what you might do. Oh, this is an easy rock to grab. I'm going to grab that one and get myself up a little faster to where I really want to get.